Okay, guys, we've now come to the final part. We're done the reward management. We'll come to that later again when we do the day and intraday strategy. All right, so let's go into that right now. Okay. Okay, so what I'll do is that I'll do the day chart strategy first to give you an idea how to do this. So normally, right, how do I start the day to know the market is uptrend or downtrend, right? One very simple way to do this before we engage into the market is that, let's say we are now looking at the market here. Okay, let's say now I'm actually on this day. Okay, take it as today is a brand new day. There's a diamond at the right corner, right? So very, very clear. You can see that just by the look of the trend, you know that it's very bullish. Like that is fact of the matter. Okay, but let's say we don't do fact. We don't know that viewership itself, right? How do I know this is bullish, right? Now you can see that this is where the last KCX was blinking. And the last time the market came very near, but it didn't come down at all. You can see this. So this area here and this area here, you can see very clearly that this guy is much higher ground. Can you see that? So this area here is where the thing is blinking. This is where the one that almost hitting there, but it recovered. So this A and B tells me that B is higher than A. Hence, therefore, the market is bullish. All clear? If all clear is all right, press the next number, number 48. Okay. All right. So now I know the market is bullish already. So that means that I know that I can just follow through to buy. So the next thing that I can see on my screen, I saw a diamond. So what I do, I just have to take this entry price at the closing level and put a stop loss at where it's supposed to be, at the low of the candle. Okay. So now I have my entry and my stop loss already, right? Okay. Now I look at the bottom of my screen. I know that the KSI is green in color. Can you see that? The KSI is green and the KCX is black in color. So which means that the market is bullish. So let's say now I do this as a guide. So let's say now I take, let's say, a $500 as a risk example. My range itself, right, is about 20 or 31, yeah? 31. My range 31. Then multiply by 100. What's my size? Can I have the answer, please? 500 divided by 3100. What do I get in size? Oh, I got 488. Okay, I got 8 some more. What's the answer? 500 divided by 3100. What do I get? All right, excellent. 0.16. Yes, excellent, guys. 0.16 is the answer. Okay, so that means that this is the size that I can enter into the market, right? This is the size. Okay, so because the KSI is green, the KCX is black, so you can do a full contract. So the size you enter will be 0.16 contract. Now, if the KSI happen to be red, then you can reduce by half. That means that if you don't do a 0.16, you can do a 0.08 because the KSI happen to be red in color. Can you understand this? So when you do that itself, right, that means your maximum losses will be only 500 and your size to trade will be 0.16. So you ask a question, Cal, but the market is moving so fast. I cannot be calculating, then I trade, right, too late, right? Yeah, that's why you need to create a table. You need to create a table in advance. Now, to do a table in advance itself, right, to do it today now, I don't have time. So don't worry, I'll create a very simple table for you later and I'll put it into the Telegram group chat. Then from there, you can self-expand on it itself. Okay? That's why you must do your order. Okay. So now with that, okay, and then I can now target. So if the market do go up right from here, I will know that how much will I make. So as the price goes up, can you take a look, guys? The price goes up, right? Wow, the market immediately go up already, go up. So by the time, let's say, it reached a certain point, let's say here, example, right? Because why? Your range is 20, your range is 31, right? So 31 times 3 will give you 93. Your entry price is 29.35, right? So you plus 93, what do you get? 2935 plus 93, what do you get? 3028. Very fast, thank you, Winnie. Always very fast. Super fast. Okay, so by doing this, straight away, you already get your profit already. So that means how much will you make? You will make $1,500 just like that. So which means that you buy here, you bought here, and then you take a profit here. Your profit now is by 1,500. You have made $1,500 just like that, okay, while risking 500. So now you understand why it's all right. If you risk example, this example only, if you risk $5,000, then you will be making $15,000 back, and that only took you 4 days. Okay, that is called reward management. All clear? If all clear, press the next number right now, which is the 49. Okay, all right. Okay, everyone. Okay, so now let's look about short selling. Same theory. Okay, I move the mouse now. Okay, can you see that? Okay, so by right, I have a diamond over here, right? The diamond at bottom. I put a line across here. So I have a diamond at the bottom, right? You can see the diamond there. So I know that it's a trade. So what happened? Everyone follow me. Okay, watch. The stop loss will be placed here, right? This is stop loss. Okay, so this is a NASDAQ. My entry is 19,413. This is my entry level. Then my stop loss is 19,070. Okay, so this is my stop loss level. So the range here is how much? 19413 minus 19070. What's my range? Everybody calculate for me. 343. Wow, very fast. Peter Leong now is faster than Winnie a little bit. Jerry on the side, 343. So that is my range for my day chart for NASDAQ. Now, of course, when we do this range that's so far away, a lot of you say, wow, so far away, so scary. Now, this is because your lot size is not doing the reward management skills. But if you actually do the reward management skills, you won't have this problem one. Okay, so now let's do that. So you go to NASDAQ and you right click on it. You go to the specification, right? You click on that right now. You will see that the contract value is only 10. Can you see that? The contract value on the NASDAQ is only 10. Can you see? So this is different from the gold that was 100. This is the NASDAQ that's only got 10. Okay, got the idea? Okay, done. Okay, so with that, okay. So same thing again, I take $500 risk. $500 risk divide by 343 multiply by 10. What's the size do I get? 500 divided by 3430. Wow, Winnie is so fast. Correct, Joe, you're right. 0.14. Correct. All right. So everyone, the market, you can entry price is 0.14 contract. Yeah, that is your size that you can enter. Okay. All right. Very good. So now everybody do me a favor. 19413 plus 343. 19413 plus 343. What do you get, everyone? 19413 plus 343. What do you get? 19756. Wow, very fast. You guys are very good. Okay. 19756. Excellent. Yeah. It's good to press this thing. Then you get yourself into the mode. If you don't press, you just wait for market to feed. I mean, wait for me to feed you, right? I can tell you never learn none. Yes, no kidding. So watch, everybody. Watch. I change the color a little bit to give you a bit of stunner here. So, okay. Change a different color. Okay, I watch. Okay. Can you see now? Look at it. The market really went all the way to the TP level of 1 times 1. Now, because this is NASDAQ, and we know NASDAQ is on a downtrend, But because it's downtrend, right, by right, you shouldn't be going long. But since the market is still going up above OP, you can generally go for the long side. But this time around itself, you see it's downtrend momentum. How do we know it's downtrend? Because remember I told you the KCX. When the KCX is coming down and the price is lowering, this is an obvious downtrend. You don't need to be a guru to see this. You can see it's coming down anyway. So the upside normally for if you are buying for day chart, the target itself is 1:1. Got it? When you are in the favor of the market, you do 1:3. But when you are in the opposite side of the market, right, you do 1:1. Can you understand this? All clear? If all clear, press the next number, and the number will be number 50, 50 already. Wow, 50 question asked. Okay, got it? So you notice how powerful is this diamond now? That if you actually know what to do with it and then you target accordingly, you are going to tell people that you make 343 points from the market when the market is coming down using a diamond trade. This is absolutely incredible, right? Okay, so now, if let's say all is correct, because why we buy? Let's take a look. Because we bought it here, right? Why we buy? It's because we buy because of diamond, and then it's a TP level, right? Okay, so accurately, we book profit over there. Then suddenly, once we saw the KSI was green, right? So I don't need to change my contract size. Agreeable? Yes. So I'm buying, but my KSI is green, so I don't need to lower down my sizing. But my target itself, right, I reduce it to 1:1. Do you understand that? Yeah. Okay. So now what happened? Everyone, take a look. Follow me. Very important. Yeah. This is where you change your life. Yeah. Suddenly, the market from the highest of point start to reverse down. Oh dear. Pump, 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 pump. Come down already, right? So once the market go below this line, oh dear, the market is in a sell mode right now. Agree? So now, where's the stop loss? This one, everybody must follow me. Yeah, follow. Yeah. Okay, so I'll take this away first. Okay. Okay. Your entry is still 19413. But this time now, your stop loss was flipped to the high instead. Can you understand that? The stop loss will flip to the high of the day of the red candle. This one we talked before already. When we are buying, we use the low of the candle for the stop loss for buying. But when we are shorting, we use the high of the red candle that we can see at the screen. So now everyone follow me. Okay, follow, yeah? So the entry is still 19413. But the stop loss is 19796. So what's the range? Can you tell me? 796 minus 413. What's the range? All right. So let's get the range first. 383. Okay, Winnie, I trust you. No worries. I think it's correct also. So now, everyone, how low can the NASDAQ go? How low? Because now the NASDAQ has turned red. And later on, next day, the KSI already turned red, right? So it's a downtrend at the moment now. So how low can it go? So you take 19413 minus 3 times times 383. What do you get, everyone? Huh? No. When it's downtrend, you go for 1:3 because you're selling. When you're buying and it's uptrend, we go 1:3. So what's the answer? So 383 times 3, this figure, minus away 19,413. You get one number, and the number will be 18,264. Correct, actually correct. So the answer will be 18,264. Okay, and then we just change the number away to this number. 18,264. Okay, got it? Okay, press OK. Hey, disappear already, right? Yeah, because it's off the range, off the chart. So now we clear the screen a little bit here, and you see for yourself. Okay, that's your answer. So you see that, guys? You basically turn around and shorted below the line. You put your stop loss over here, and then you can see the market really coming down. So again, you have just used $500 to basically mix the money of 1,500. Now, of course, the market go way lower lah. So if you think that you can actually sell some more or hold it down some more, go ahead. But my job here is to make you rich by making this simple adjustment for you. Okay, all clear? So that is how you do your reward management on a day chart and the sizing, the calculation. So that's now, right? That's the calculation, right? You take $500 divided by 383, right? That is the total range. Then you multiply by 10, right? What's the size can you enter? So 500 divided by 3,830, the size will be 0.13, right? So earlier you go in 0.14. This one you go 0.13. So your sizing can still enter one. Even the range is 300 points stop loss. So what? You can still enter the market, right? As long as this bullet size is big enough lah. Now for day chart trading, right? Seriously, the minimum day chart bullet size must be at least 500. Anything less than that is right. The risk is going to be very high. Not worth it. Huh? So you must consider this factor. So again, with the market, you do 1 times 3, meaning 1 risk, 3 units reward. When you are against the market and you're buying, then you do a 1-to-1. That will be enough for you. All clear? If all clear? Yes, this is a strategy for day chart. This is the strategy for day chart. If all clear, press 51. Oh, so fast, I haven't said it yet. Okay, this is for day chart. But of course, again, you can use a KCB to target the next level. I'm just giving you a rough idea to do computation, to know when you go full size, when you go half size, and stuff like that. That is the whole objective for this part here right now. Okay, so now we go to the one you're waiting for. It will be the intraday. Okay, let's go intraday now. The one that you've been waiting for, yeah, the whole day, waiting to trade on the 5-minute chart. Okay, let's go. Okay, so let's look at a 5-minute chart on how do we trade this one here itself. So everyone, let's do it, okay? So we know that the thing is this, the gold chart definitely is a bullish market. So as long as the market stay bullish, the market will definitely be looking for the upside favor. Now, because 5-minute chart, right, you don't need to count the 1 times 2, 1 times 3, because seriously, your KTRs are enough for you to take advantage of that. So all you do is just follow me, and then we can get it done very easy. Yeah, follow me now. Okay, so example. All right, so this is where you have your this 5-minute chart, right? So supposed to be a buy, but the market stayed below the line. So you can see that the stop loss was supposed to be here, which is very near. Now this is way too near to be comfortable, because very easily just a spread alone will knock you out. So you have to put at the stop loss where it make more sense. So you move backward from right to left, you look backward. The nearest highest point that it makes some sense will be this guy here. Can you see that? Now, can you put a stop loss here? Also can, no problem. So you say, no, I want to put it here also can, no problem. Where you want to put is up to you. For intraday, stop loss, where you want to put is up to you. But the difference is this: you put it here itself, okay? This is your range. Your range is so small. So if the market go to the target here, your profit will be very, very healthy. But you say, no, Cal, I think it's too near. I want to take my entry to here. My stop loss is here. This is my range. So you notice that, then this is your profit. But you say, no one, you have to do your range from, you want to do a range from here instead to your entry, right? Then your profit will be only here itself. So almost like 1-to-1. Can you understand this? So the better the range, the range gets smaller, then you aim for next technical point, it'll be better. All right, can you understand this? So the further you put, your range will get bigger. That means your reward also gets smaller. So that's now was 1:5. Now because of you put a stop loss at so much further away, your profit can be only 1:1. Can we understand this? All clear? So by right, the default way of doing this is that when you buy something, right, you buy something, your stop loss put at the low point of here. Now in this case itself, right, in this particular trade, you will lose money because the market trip you and there's no other lows you can use. So that means that after you buy, right, immediately the next 10 minutes, you will lose money. That one is a fact, cannot change away. But the only thing that can help yourself is that you notice at the bottom, yes, the KSI itself was red in color. So if you are buying and the KSI is red in color, you do half size after you calculated it. So let's try it now, everybody. So let's try it and we give you an example. So my entry here itself, let me just bring it to you. My entry to buy is actually about this 3345. Okay, my stop loss is about 3342. So you'll notice that your entry price, wait, let's double confirm, yeah? 3346, sorry. 3346. Okay, 3346. My stop loss is 3342. So the range is only $4. Okay. Remember, guys, we are trading the 5-minute chart. You don't need to risk $500 for a 5-minute chart because you have so many trades later. But I think to risk basically 2% is fair lah. So let's say now your capital is $10,000. You divide it by 2%. Okay, times 2%, right? Or you multiply 2%, you get how much? $100, right? Agree? 200, sorry. Correct? 200, right? So $200 divided by $4. But because this is gold, right? You need to multiply by 100. So what's the number, guys? 200 divided by 400. I think the number is 0.5 already, right? Yeah. Okay, thank you. 0.5. Yes. So if you have done that, okay, you have done that, then your first target will be here, right? Because that's the nearest target level. So if you have done that yourself, right, you can see the market actually from entry price all the way to the highest point was $99.60. Okay, that's already 2 TP level already. 2 TP means 2 times already. Okay, so let's say you really aiming for the sky and you miss it, didn't touch ma, then you pull back down, right, and it turns red color. Can you exit anytime? Of course you can. So the thing is this, the mathematics itself is to do a 0.5 earlier, which you will lose 200 first, and then subsequently you re-enter again and you make back your this 400 from down there. Okay, just that the market missed the KTR +1, which is no way we can think about this. There's no way out. So as the day goes by, you see another opportunity again, and you trade it again for some reason. You bought here, your stop loss you put here, you get tripped and it's too close. So let's say you put it further away, which is the next low, then this is fine. So what you did was that you buy here and you take the lowest of the previous bar here. So you have a entry based on diamond, a stop loss you based on the previous low of the previous candle low, so that you will have a stop loss. Can you see that? So with that, again, you purchase it here or here, and the stop loss is all the way here. Can you see that? And of course, the market again go to KTR plus 1. So again, you may have made back some money from your trade. So at this junction here, it's up to you as an individual. Do you want to take profit, or you say, no, I want to aim for the sky? Now, nothing wrong is that. There's nothing here to help you to tell you can go to the sky now. No system does that. But you just have to hang on now. So after you hang on, right, the market goes sideways, as you can see on the real live screen. And then the market starts to go down, right? And you notice there's a 4 diamond here, a stacked diamond. If you draw a line across it, then you know something is wrong because the market just refused to go any higher already. So what must you do? If you are long earlier, you should consider to cut loss by then. Then of course you can consider to turn short also at the same time. So same thing again, the market's below OP, you turn short itself, your stop loss will be either here or you put it here. Okay? And then you let the market ride down all the way for you itself. So when you do this calculation, right, you will know that on the day that market is above OP, you generally will buy. But in this case, when the market is below OP, then of course you have to take the sell position instead. Can you see that? So of course, until you hit the very good technical point again, you just reverse your cost. So for here, if you are buying the MLP, okay, and then you know it's hit MLP already, cannot go down, right? Then you draw this line across it. This is where you should be buying, and your stop loss is fair enough, then you just put it there. So that is how it is. So by the time you reach here or you reach back here again, the market will be up by at least 1 time to 3 times profit. All clear? If all clear, press the next number, number 52. Now, there's no way we can know whether or not where is the best time to take profit. But I told you before, right? The KTR itself, you can use it as a guide. If the market is going up, then use the nearest KTR to take profit. If you think that you can go to the next level, then you just hold your position now. It's just like you buy here itself, right? After you buy here, the market really will go to KTR minus 3 ma. But after that, it pulls back down. So imagine if it pulls back down, you are not able to take it. Then you see the market goes below the line, you just panic, right? Because you didn't hit stop loss and you saw the boys are selling, you panic, you turn short. Then of course you have to cover back again later on. But let's say you didn't turn short, but you cut a position, then what happened to you? You will feel, oh, what a waste. But then again, if you do it properly, you will see that the market after that, right, is still a buy at the line and continue to go higher and go up. So this one, we can really cannot tell you that how and when it will go up again, but we just know that where can we enter the market and where to put the risk itself. Once these two are done, the rest is easy. But you should know me very well. I said that before. Once the market hit KTR 123 or minus 123, I will try not to trade after that already. So which means, give an example like this, you take a look, everyone. Okay, so the thing is this, the first trade that we have is here, right, opening and go to KTR plus 1 already. So KTR plus 1 is given. Then when it came down, right, KTR below OP, KTR minus 1 was also given very nicely. So at this junction here, KTR plus 1 and minus 1 are already given. So now if I really want to sell again, the market must be CCYR below KTR minus 1 so that I can aim for minus 2. Then after that, you see it bounce. Now all this whole area here, I don't trade because it doesn't give me a good vibe on that. The only thing they can go for will be if it goes back above OP and then goes up. So now the thing is this, the market now stays sideways and then it breaks below KTR minus 2. So the next target will be KTR minus 3. Then it zoom, came down very fast. Can you see that? So that's why you must understand the standard deviation. Once the market opens, it can go to KTR plus 1 or minus 1. Once it trigger, if you want to go KTR plus 2, one thing to note is that you have to stay above KTR plus 1 and then it goes higher. So vice versa, if it goes down, it has to stay below KTR minus 2, then you can go to KTR minus 3. Okay, so that is how we do the intraday. So intraday is not difficult. You just have to find a diamond, draw the line, and let the market decide. If it's unclear type, very flimsy, and the boys are selling, and you know that you're buying below the OP, then of course you shouldn't be involved in the buy side. You should consider do the sell side already. Okay, Ken? All right, so all clear, yeah? So the next thing we're going to do will be the crazy elephant trade, which I shared with you just now. I'll share this again with all of you and try to get a hold of this. Now, sometimes people say this elephant trade is a bit hard to catch. Well, it's not difficult to catch, but you just have to remember some house rule. Okay, yeah? So the first house rule is this. When the market is lowering, the high of each bar has to be lower. Can you see that? The high of each bar has to be lowering or lower. So then this happens itself, right? The KSI has to be green in color. There's no buts about it. So once the market breaks the one of the high, which is here, once the market breaks the last high, usually the market will recover to where it started. And because of that, the boys all buying, so the market will be like, wow, one single trade traffic towards the upside itself. So that is called an elephant trade, whereby price comes down, but KSI is green in color. Okay, so you have to be throughout, yeah, cannot be halfway only, yeah. So let's find for you an example to show it to you. Now this example is a failure one because what you saw is that the price was going up and the KSI was red, so by right should be on the way down. The market did break the previous low, so I thought that the time goal is going to come down already. But next day, wow, you see next day the market just U-turned and then went up. And the best part is that the KCL was there on the day because red color CCYR and KSI red, so that's why the KCL line was actually available here. And because of that, right, from a short, I had to go back to long again, and that's how the market goes up. So you cannot always fully rely on what I just said to you. You must combine everything together. So let me find for you more elephant trade to give you the feel of this, yeah? So you can see this guy here. The market was lowering. Can you see it's lowering? But the KSI is all the way green, right? So once the market break out this part, you can see the market really go back up to where it started. Really amazing. Can you see that? Yeah, you will always go back to where it starts. Yeah, that's the main point of this. Okay, let me find for you more example. All right, not the best example for this, but as you can see, the price is coming down and it's coming down fast, and then the boys are buying. So once the market cross above it, you can see the market going back to where it started. Yeah. So let me find more example. This is a classic one, small one, lowering high, but the market KSI is green. So once you open only, right, you can actually buy into the market. Yeah, you have more example to let you feel the market difference. Yeah. Okay, here you have 3 bars coming down, but the KSI is green in color. So the market, once it breaks up, the market goes back up again. Okay. It's not easy to find this out of candle. I mean, this are elephant trade every day. Once in a blue moon, they'll appear, and that's where usually we will basically go heavily onto that. Yeah. Okay, I don't think there's much on the go after that already. Okay, bringing other market example like Nikkei. No, this strategy doesn't apply to 5 minutes. It's only for day chart only. I'm trying to find for you a better one, a clearer one. Yeah, there are small ones, but not as effective. Okay, here we go. You see this guy so high, right, on top, and the Nikkei dive right all the way down to the low, right? Can you see that? So from this point here, the highest point, it nose dive down by 1,800 points. So why is it nicknamed an elephant trade? Because elephant is the biggest mammal on land. Yeah. So the elephant itself, right, is the boys which is here. right? Because previously we have zebra trade, we have some funny names. So when elephant is a bigger sell, when you see that the market is coming down by 1,800 points, obviously everyone will run away, right? But you see, as the market goes down by 1,800 points, the KSI stay green in color. So if the market rebound, it will rebound to where it started. Can you see that? So that's why if you want to make a lot of money from elephant trade itself, right? You find yourself set up, and then when the market is coming down, it breaks the high, then you can buy. So you follow the rule. There is a buy here. It's all right. There is above always a buy, and at the same time there was a 4 diamond here. So of course you can see this, and because it's a color change, KCX as it's a KCL level. So this buy was a confirm must buy because everything was in line with that. You have your 4 diamonds, you have your KCL, and you also have your elephant trade. This particular trade is a very, very strong trade to buy. Okay, got it? Yep. So that is how it is. Now, elephant trade, if you happen to spot it right, please let me know. Then I can just check for you. In case you get it wrong one, at least I'm there to assist you to make sure that you got the correct one, yeah? Because you get the wrong one, you'll be hit by the market. Okay? All right. Now, when the elephant trade will be dissolved. So when the market is supposed to go up, but then the market turn the other way around, then that's it, or the KSI turns color, then that you cannot use anymore already. Okay? Yeah. Okay, so you can see over here, the market was going up, but the KSI was red. So the price, when it come down, really smashed down, yeah? Okay, all right, so that is an elephant trade. It won't, like I say again, it won't happen like every day. Maybe 1 month or 2 months one time. That is where you capture it, it'll be very good to use already. Yeah, you capture it properly, it'll be very good to use. Okay, now I want to show you the DEX trade on this one here, just to show it to you why it's so important to know your diamond well, yeah? Okay, see everyone, the diamond, as a diamond here itself is a stacked diamond. So by right, you should use the closing price of it as a guide, right? Which is here. So the closing price of this guy on that day, the level was 21,268. 21,268. I want to show you this from here. 21,268. Okay. Now watch this, everyone. I've changed to 5-minute chart right now. So from day chart, I switch it to 5-minute chart. Yeah. Okay. Now we see how the market perform when the market is below that. See, take a look, everyone. So this is what happened during the day for DAX, German DAX. So the market opens, straight away it jumped to KTR +1. So again, it's a yellow candle, +1 is the first target. Wow, so very fast, 20 minutes done already. I love DEX because DEX very good to trade. It's very directional in the morning and in the afternoon session. One poop, you go to the target. So either KTR +1 or KTR -1. Very, very easy to trade. Okay, so what happened next itself? Remember this line come from the diamond level, right? You see, after that, the market just cannot go up already. Stuck. So all the CCYR, you see it goes down very nicely. And then after that, right, you see what happened? The market did try to go up. And when it break above the CCRY, it did go to KTR +1. But again, when it failed, it breaks down again and come back down again. So that's why this line itself for diamond is very important. You can use it properly, and you can see that if the market cannot go higher, usually it will go down. If it breaks above it, then it will go up. So that's why the line is very important for the diamond side. Okay, so that is the diamond that was available on last week, whereby you can see there's a thing here. So now we all know that if the DEX doesn't go past 21,268 Monday, then there'll be some selling in the market. But I don't know whether DEX is open on Monday or not. Yeah, so take note of that. Yeah. Okay, so that will be the part about the elephant trade. So last one that we're going to cover now will be the DJDD. It's called the Doji Directional Day. Doji Directional Day. So what is it all about? Okay, very simple. Let me just show you a chart and you can understand this very fast. Okay, so let me just, I must clear my chart a little bit. Okay, guys. So take a look at this range between this month to this month here. So this is the month of March, right? Can you find for me all the doji? Now, doji, as we know, is like this, whereby it's like the body is small. So how do we classify doji, right? It's when the body itself is less than 20% of the entire wick. So that means that this is the high, this is the low. The body itself cannot be lesser than 20%. So if the body is lesser by 20% of the entire wick, then this is a doji. So of course, where are the dojis for last month? Let's take a look. The doji for last month will be definitely this guy and this guy here, and then this guy here. Can you see that? And of course, one more over here. Yeah. There are 4 dojis on in last one chart. So what do you notice that about the doji the next day? The key is next day. You notice that the next day, right? Once the market stays above OP, it's a very strong buy. If the market stays below OP, it's a strong sell. Can you see that? And if it's a strong sell, you hold all the way to the closing. If it's a strong buy, you hold all the way to the closing. Can you understand this? So in short, right, when you see a doji directional day, a DJDD on your screen, that means, right, the next day itself, right, it will be a very good trade, right? That means that yesterday was a doji directional day, a DJDD is mentioned. So that means that today, if the market stay above OP, you just buy and hold all the way to the closing. So if instead the market open already, initially go up first, but now you reverse down and break below OP, right, then you just sell and hold all the way down. Okay, give an example here. Let me just show to you that example. So on this day itself, right, you can see this is a doji day. Now, initially, it went up first. Then after that, once it breaks below OP, it sell, and you notice it always closed near the bottom of the day. All right, so there's a doji at the start of the month in April. Same thing again, it went up first, but eventually it closed at the bottom. All right, so result of day itself is like this. When it's a doji day, the market opens and trade below, you just hold all the way till the closing. Usually the profit itself is going to be huge. Okay, so this is only applicable when the previous day is a doji. So the system itself, right, will inform you when it's a doji. Let me show it to you now. On, yeah. Okay, can you see it? Okay, so how does it work? So this guy yesterday was a DJDD. That's why the system will show, right? The system will show a DJDD on the screen. Doji directional day. So what should I do? Below OP, I will sell, but because the KSI is green, I will sell half. But once the market goes above the OP and the KSI is green, I will buy and hold all the way to the closing of the day. All clear? If clear itself, right, press the next number, which is number 53. Okay, all right, cool, right? Okay, so this is the DEX. Okay, so what do we do? It's a doji yesterday. So that's why the system will tell you it's a doji. So same thing, below OP, because the KSI is red, you should sell full contract. But because after that, it reverses above OP, you will buy, but half contract, but you still hold it till the end of the day. Now, of course, you say, "Cal, wait, end of the day, that means what? 5 a.m. like that? I don't sleep." Okay, very simple. Of course, when you are holding a position and it's in profit already, and you don't want to wait until it goes all the way to closing, you can set your TP level at any level, and then put a stop loss in place. Make sure it's SWL. SWL stands for show win level. That means that once you buy something, let's say you buy $1,000, your stop loss is 900, right? So now the price go to 1,400 already. Wow, make a lot of profit, right? You can shift the stop loss from 900, shift it to 150 or 1,050 or 1,100 to make sure that you will not lose anymore. Even if the market pulls back to 1,001, you minimally make $100 profit. You understand that? So when you are in the doji directional day situation, after you have buy already and the price is going up, right? And you want to sleep, right? You just take your stop loss level, shift it to above your entry. Then you put a far away TP level based on the chart, whether it's KCB or you want to do the 1 × 3 formula. Then you just put it there. If the market really will go there, it will trigger it and come back down. So that's why usually for DJDD, once you're in the right direction, then you don't fight. Now, usually people lose money on DJDD day is because they fight the market. So I give you an example like this, yeah. So what happened is that you buy right is a DJDD, right? So buy right below OP you sell because KSI is red, is normal. So you shorted one full contract. You expect the price to fall. But interestingly, the market just don't want to fall. The market now stays above the line. All right, stays above the MLP. So what can I do? Switch the position from sell to a buy, but because the KSI is red, then you just do half of the size and you just hold all the way until the closing price itself. So for those who can put the TP level before you sleep, just do that. For those who can wake up early, then you just take a look at the market. For those who don't want to incur overnight swaps, then you just basically, before you sleep, you just close the position. Or you wake up a bit earlier before the market close for 1 hour break, you just come in, take a look, and then close yourself. So whatever it is, remember guys, if you hold overnight position, there will be swaps incurred. Now, the incurring of swap, right, most of the time, there'll be two different directions. Meaning if you buy, the interest is there, so you must pay the daily interest. If you sell, the house or the LP will give you the daily interest. All right, this one, we'll talk more about this during the day-to-day trading. Then I can share with you all with the real time and figures, yeah? You don't talk now, I get tired yourself, no point. Okay, so DJDD is whereby you have to follow the OP. If the market stay above OP, you just stay above OP. Don't care about the fundamental or whatever. If the market stays above OP, you just have to buy and stick to that principle. So that is the DJDD. Now, DJDD don't come every day, but when it comes to sell, right, you can see there's a lot of money to make. So that's why we always welcome DJDD, because we can make the bigger buck after that itself. All right, all clear? If all clear, press number 54. Okay, so now we have almost come to the end of the topic, the session, and I know that it's going to be it's a lot of questions, a lot of things that you learn, and to have it be consolidated, digested in a single day is a bit ridiculous, but I believe that it can be done. So to make you happy a bit, let's us do some analysis for coming Monday. At least you can practice and do what you learn from here itself. Okay, let's go. Dow Jones. Okay, let's just practice in ahead of what will happen on Monday. So Monday will come, and then we know a few things first. We know what's a KCL on Monday. We know the nearest KCB is here, but we don't know whether or not market will gap up, gap down, whatever. But the numbers are all there in preparation for you. Now, we also know the KSI is great in color right now. KCX is blue, so everything pointing to the bear side. So again, we'll see what happened on Monday. Then we will know what to do. Remember, the pivot will change color. All right, so the OP will be different also. So Monday, KCL, all right, KCB, KSI, KCX, all these that I just mentioned will be the same, but the remaining numbers will change. So if the market now is doing a CCYR, right, then likelihood if the market opens and go down, then there'll be some selling. Now remember, this is not available. This is Thursday price already, yeah. Okay, so that is what you can do for Dow Jones on coming Monday. Okay, now for gold trader, we already talked about this. All right, I don't think this is doji. So on coming week itself, right, be careful. The boys are selling already. So if the market opens higher, don't chase. Okay, there will be some sellers in the market. Now, of course, again, we do a simple diamond thingy. We say that it may go all the way to 34 plus, right? 34 something, right? Then we just see whether it go there or not. What's the number? 34, yeah. That's now the number that we say go to 3492. Wow, very good, Ruben. All right, so 3492 was the target. So whether you go there or not, that means it's under $165 to go there. So I don't know whether this is going to happen or not. But for me, I don't care. Tomorrow, I just have Monday, I just open already. I just know what to do and I prepare myself. All right, definitely for gold, it's a bull market. So how about the Dow Jones? Is it bear market right now? Well, you can see a simple thing. This is the KCX. This is the KCX, right? So this is the low. This is the recent low, right? So that means that the market is still bearish at the moment. So, Cal, is this an elephant trade? Yes, indeed, it's elephant trade. The low of the bucket got higher, but the KSI is red. So I shared this with you right yesterday. I say very simple. This is the 1, 2, 3, 4, 5, right? The fifth person, the fifth bar, and this is the one that basically calls for it. All right, then you just put a TP level at the closing price. So that's why the next day the market touch only, right? Come back down all the way itself. So now the thing is this, the market now is going to come down. If we go all the way down, the first TP level will be here already because this is where the low was. And then if the market really snowball down, the next KCB will be the target here. And last but not least, it will be coming down to finally get me out here itself. Okay, so that is the how we're going to use the Dow Jones to trade on coming Monday. If the market supposed to sells. Now, of course, the opposite can be true. If the market really finds strength to go up, wow, how high will it go? So everyone, do me a favor. That'll be the last part itself. Take the opening price of this big yellow candle. The opening price is 37,537. 37,537. Yeah, she is not here. Okay, the closing price is 40,007. Yeah, 40,000. 40,776. So you take this number minus this number. Okay, minus you will get the range of this entire thing itself. Then you take this one, you add back to this 40,776. What do you get? So it's 40,776 minus 37537. You get a number, and this number you plus it back to 40,776. You will get a number. Why number get lower? 40,776. All right, minus 37,537. Minus first, then you take the range, you plus back to 40,776. You get the final figure, correct? 44,015. So if the market really want to go up, wow. So I tell you this, everyone. Since this guy has a diamond, right? Okay, so what can you do? So if the market really want to go up, it will have to break this number, which is the number that we talk about. And then you take this whole body and just expect to go up this way. And that will give you the number 44,015. So that will be the upside of the market. If the market breaks above the opening price here, okay, I mean, it stays above here. Once it go up, right, the entire body will be multiplied and you go to this level already. Okay, all clear? So that is how we use mathematics to play this thing itself. So we will look into that, yeah? Okay. All right, guys, that will be the end of today's session. Yes, we have come to the end. I have covered everything that I need to share with you for the class. We started a bit late, all right, but we covered everything over here itself. Okay, everything is covered. The only thing now we need to do is to do a little bit more example, a bit more live trading, and a little bit of knocks here and there. Then you are ready to go. All right, you're ready to go. So you don't need to worry about that part itself. That part is the least of my worry, having knocks in the market. Okay, that is the least of my worry, having the knocks. I am more concerned for you now is that whether do you capture the gist of this itself, and then after that, right, practice this. So give yourself a break, don't need to work on this, all right? Then you just rest for tonight. Then later on in the evening, I will do some example for you. I'll do some table for you, and then you can practice this, and your question again, you can ask me. All right, that will be all for today. Take care, and I thank you for coming in from all the friends from different countries. I really appreciate that, and I hope that you have a great lesson. And with that itself, that will be the end of today's session. Thank you. Take care. The video itself, I'll work with Khatib on the site and see what can we do to break it down to multiple pieces for you. Okay. Thank you. Take care and have a great day. Bye-bye.